No se escucha. Joining us today are Alejandro Reyes, our chief economist from the economic research team, Carlos Gabriel Garcia, who is our financial planning and performance country leader, along with Nicolas Tripuy from the risk department, and Mario Sanchez, our leader in ALM and investor relations. As a reminder, today's presentation will be accessible for download on our website under the investor relations section at the link labeled agenda. Please be informed that this call is being recorded. To participate in the discussion, you can utilize the chat feature or simply raise your hand using the button located at the bottom right section of your screen. Our agenda for today includes key highlights from the quarter, a brief overview of the macroeconomic landscape, insights into our financial performance, and a discussion on recent achievements. Without further delay, I'll now hand over the call to Mario Sanchez.
Thank you, Juan Sebastián. Good morning, everyone. As Juan Sebastián mentioned, my name is Mario Sanchez. I am the head of ALM and Investor Relations at BBVA Colombia. I am delighted to welcome you to our earnings results call, where we will review the key developments of the third quarter of 2024. Throughout the session, I will also invite members of our panel to share their insights on specific topics. Let's begin with slide 2, where we summarize the key takeaways for the fourth quarter. This point will be covered in more detail as we progress through the presentation. This quarter, we report a net loss of 222 million COPs, primarily due to deterioration in asset quality and higher provisions. Despite this challenge, we had a 0.69 growth in loans compared to fourth quarter 23. In terms of operational performance, our efficiency ratio stood at 57.5%, reflecting a slight year-over-year decline of 1 basis point. However, BBVA's focus on cost management and operational discipline enabled us to achieve 16.33% increase in gross income compared to the same period last year. While our asset quality faced challenges, it remains significantly better than the industry average. Additionally, we kept our capital position strong with 180 basis points above the minimum regulatory requirements, further reinforcing our financial resilience. With that overview of the quarter highlights, I will now hand the call over to Alejandro Reyes, our chief economist, who will provide an analysis of the economic outlook. Alejandro, over to you.
Development of Colombia. The Colombian economy experienced a recovery in activity in 2024 due to an improvement in domestic demand and exports growing by 1.7% year over year in 2024. This is an up number from the 0.7% in 2023. This growth trend is expected to accelerate in 2025, somewhere around 2.5%, and in 2026, somewhere around 2.9%, backed by private consumption and investment. In a context of improved financial conditions locally, lower inflation and interest rates. Inflation has interrupted its downward trend and stabilized slightly above 5%. This has sprouted some concern on the capacity of inflation to moderate and the different potential pressures that it will endure. We expect some additional moderation in the next months, and headline inflation should close 2025 at 4.4%, slightly above the target ceiling for the central bank. For 2026, inflation should continue the path, closing at 3.7% within the target range. In this context, and due to a significant deterioration in the fiscal front, Banrep has paused its rate reductions in the first quarter of 2025, leaving the benchmark rate at 9.5%, with a real rate well above its historical levels, into contracted territory. We expect Banrep, once inflation regains its moderation path and the noise attributed to the fiscal front reduces, to restart its reduction cycles, and rates should close 2025 around 7.75% and 2026 somewhere around 7.1%. 25%. Levels are that are above historical averages, which point to the added pressures on the fiscal front and to a higher inflation and interest rate new normal worldwide. One of the main developments in the past couple of months has been the deterioration of the fiscal front. The fiscal deficit closed 2024 at 6.7% of GDP, well above expectations and prior numbers. This was driven mainly by a steep fall in revenue, both against prior year and mainly against the budget. In the end, the government managed to reduce expenditure, but it was not enough and thus ended with a higher deficit. Despite this, the fiscal rule was fulfilled due to a provision that allows to classify some shocks as one-time events and thus are allowed to be compensated in the fiscal target. For 2025, the budgeted revenue and expenses are again high, and the fiscal pressure is expected to continue with some mild moderation in 2026. The government has announced they are evaluating a tax reform, but its capacity to approve the bill is limited in Congress at the moment. The FX has had a strong start of the year, reversing its trend observed in the second half of 2024, backed by a more favorable external context and by capital inflows, portfolio investments, and tax payments. We expect the second quarter to show some deterioration of the peso, driven mainly by global noise and tariffs, some increases in demand for import purchases, and the fiscal noise. The peso should stabilize above 4,350 pesos per dollar at the end of the year and the beginning of 2026, but it could have a better performance in late 2026 when there is less external and internal noise. Mario, back to you.
Thanks, Alejandro. Now, turning to slide 5, we can clearly see the continued momentum in our digital transformation efforts. Throughout 2024, our digital and mobile platforms have remained central to how we deliver the seamless financial experience to our customers. At the bottom of the chart, we see we closed the year with 2.70 million digital active clients and 2.08 million mobile active users, demonstrating stable engagement and reinforcing our leadership in digital banking across Colombia. What is especially encouraging is the consistency in digital sales, shown in the top half of the slide. Our monthly digital sales remain solid throughout the year, reaching a peak of 43.8% in November and closing December at a healthy 37.5%. Cumulatively, digital sales accounted for 34.65% of total sales, underscoring the continued and steady adoption of our platforms as a preferred channel for everyday banking needs. This performance highlights not only the trust of our customer place in our digital channels, but also the value and simplicity of our platforms bringing to their daily lives. Looking ahead, we remain focused on further enhancing functionality, expanding adoption, and delivering an increasingly intuitive and efficient user experience, all while supporting inclusive and sustainable growth. With that, let's move to our financial highlights. Carlos will now walk us through the key performance indicators and their strategic implications. Carlos, over to you.
Thank you, Mario, and good morning, everyone. Let's begin with business activity. The environment of declining interest rates has supported continued growth in our loan portfolio, particularly in the mortgage segment, which grew 2% year over year. However, the consumer loan portfolio was negatively impacted this quarter by write-offs in personal loans, resulting in a 3% year-over-year decline. In contrast, the commercial portfolio showed modest growth of 4% year-over-year. As a result, total net loan portfolio growth stands at approx 0.2% year-over-year. This shift in the portfolio mix aligns with BBVA's strategic objective to increase our presence in the commercial and corporate segment. Now, turning to profits on slide 7, net interest income has recovered, posting strong growth of 18% year-over-year. This performance reflects the success of our ongoing liability management strategy, which has enabled us to fully capitalize on favorable liquidity conditions and interest rate reductions. Provisions, however, remain a key challenge this quarter. We observed significant deterioration in the personal loan segment, which led to a 75% year-over-year increase in provisions, resulting in a negative net income for the period. Expenses have increased as expected, driven by salary adjustments at the start of the year and our continued investment in CapEx and digital transformation initiatives. These efforts underscore our ongoing commitment to innovation and enhancing our clients' digital experience. In summary, the bank recorded a negative result this quarter, primarily due to elevated provision expenses. However, we believe we've reached the peak in impairments, and with the strong upward trend in net interest income, we are confident that BBVA will return to profitability in 2025. Mario.
Thank you, Carlos. Moving to slide 8, let's delve into the highlights of our funding strategy. This quarter, our total funding increased by 0.9% compared to the previous quarter and posted a solid 2.1% increase year-over-year. Our funding mix has remained stable, with minimal changes in checking accounts and term deposits, reflecting consistent trends in resource allocation. While there have been some quarterly fluctuations, the overall composition of our funding aligns closely with where we stood a year ago. We have managed to grow our liabilities while preserving a balanced funding structure. This stability reinforces our financial resilience, enabling us to meet both internal and regulatory requirements effectively while continuing to support sustainable growth. On slide 9, it is worth highlighting that credit spreads have shown a consistent downward trend since September 2023, with this decline becoming more pronounced throughout 2024. BBVA's funding strategy has played a key role in adapting to and capitalizing on this trend by leveraging a detailed analysis of the interest rate curve and aligning it with tightening credit spreads. We have been able to achieve notable reductions in our funding cost. This strategy focus has not only enhanced cost efficiency, but also driving a meaningful increase in net interest income. Through a proactive approach to market conditions and a focus on optimizing the balance between credit spreads and interest rate movements, BBVA has delivered a strong financial performance. These efforts positioning us to continue taking advantage of favorable market dynamics, further strengthening our path towards sustainable growth and profitability. With that, let me hand it over to Nicolás Tripodi, who will provide further insights into BBVA's credit portfolio.
Good morning, everyone. My name is Nicolás, and I am the Director of Individuals Credit Risk. The year-to-date cost of risk stands at 3.42%, confirming a clear trend of improvement in recoveries, which is now becoming more evident. It is worth highlighting that the standalone cost of risk figure for December 2024 was 2.83%, reinforcing the positive performance and giving us an early indication that this favorable trend will continue into early 2025. In consumer lending, the NPL ratio has reached 8.39%, above the sector ratio. However, when including write-off, our combined ratio stands at 13.1% compared to 17.5% for the sector. This highlights not only our charge-off strategy, but also the deterioration observed in this segment. One of our key monitoring metrics is the flow of credits entering delinquency over 30 days. At its worst point in Q1 2024, this entry rate peaked at 1.5%. By year-end, it dropped to 1%, returning to levels last seen in Q4 2022, largely driven by improvements in the consumer loan portfolio. As mentioned earlier, this is already reflecting in the trend of monthly provisions, which have improved significantly. From June to December 2024, monthly net provisioning flow have declined 35%. We continue to strengthen recovery efforts through new management models and improved technology. Mortgage and commercial portfolios maintain healthy growth with risk indicators outperforming sector average. And in the commercial segment, we are maintaining close monitoring and policy adjustment in vulnerable sectors such as healthcare, government contractors, housing developers, energy distributors, and telecommunications. That will be all from my side, and thank you for your attention.
Thank you, Nicolas, for your take and explanation on asset quality. Now we can move on to slide 11, where Carlos Garcia will explain our capital position.
Thank you, Mario. Regarding our capital position, we closed 2024 with a total capital ratio of 13.09%, which is 159 basis points above the regulatory requirement. Also, as Mario mentioned at the beginning of the call, CET1 ratio also remains strong, standing 180 basis points above the minimum threshold. Quarter over quarter, we saw a positive movement in both indicators. The total capital ratio increased by 18 basis points, while the CET1 ratio rose by 30 basis points compared to the third quarter. We remain firmly committed to protecting our capital base and ensuring its optimal allocation. Our strategy is centered on investing in high-quality assets and prioritizing opportunities that deliver attractive risk-adjusted returns and support long-term value creation. This disciplined approach underlines our continued focus on sustainable growth and prudent capital management.
Thank you, Carlos. It is a privilege to share meaningful progress BBVA has made in Colombia throughout 2024. Our strong commitment to social investment continued to generate positive transformation in the lives of thousands of Colombians through our impactful actions focused on education, entrepreneurship, humanitarian aid, and inclusive sustainability. Education remains the cornerstone of our efforts. This year, we support over 465,000 students throughout the Connected for Education program, bringing free internet, tablets, and digital training to more than 318 schools nationwide. We also awarded 222 university scholarships and delivered more than 8,800 school kits to children in vulnerable areas, reaffirming our mission to empower future generations through equal access to education. Throughout our corporate volunteer program, more than 770 employees and their families donated over 6,400 hours of their time in activities related to education, environmental conservation, and humanitarian aid, benefiting more than 20,000 people. In the field of humanitarian assistance, we responded to climate emergencies by delivering over 4,000 aid packages across 12 departments, directly supporting more than 56,000 individuals. Over our support extended to members of the armed forces and their families, where we enable over 240 benefits throughout higher education programs, technical diplomas, and digital literacy training. We also mobilized 5.9 trillion copies in inclusive finance, supporting women-led business, rural entrepreneurs, and projects aimed at social development and territorial equity. This included microloans, specialist training, and strengthening our regional economies through digitalization and sustainability. These efforts speak to BBVA's long-term commitment to inclusive growth and environmental protection through our initiatives such as Biodiversity Bond and Blue Bond and strategic partnerships with local organizations. We are aligning financial operation with social and ecological impact. The results of 2024 are clear. We are building a resilient, equitably, and sustainably future for Colombia. At BBVA, we believe that financial success must talk hand in hand with social responsibility. Thank you for your attention. We now welcome your questions.
Since there are no questions, we conclude our presentation. Thank you very much and have a great day.